I think inflation, we know it's here, but the question is, will it stay for dinner? And I think it will in some ways. And what I think is kind of going ignored is really the energy prices are very visible. We know that they're rising, particularly with the crisis in Europe. But shelter prices are the things that are actually making CPI stick around and stay more elevated. And the reason that happens is we saw a 21% rise in national home prices, and that actually leads shelter prices in the CPI component by about a year. So we're seeing a firming of those shelter prices, and that makes up about a third of the CPI component. So I think inflation stays elevated, but I do think it still comes down. So I think it comes down from its current levels to maybe something in line with like 3% for 2022.
So if we use the markets as more of an indicator right now, we watch things like break-even rates, the difference between Treasury securities and similar tenor, I guess, inflation projected securities, and they don't show that things are going to get that bad down the line, at least not from a 5 or 10-year perspective. How exactly then are the markets handicapping this kind of rising inflation scenario in the way that it's not exactly showing up massively sometime down the line, although we're feeling the pain right now?
Well, I think it goes along with the story of constantly climbing this wall of worry, right? So I think investors are willing to look through a lot of issues. But to say that it's not having any impact, I think is probably not true, because you're probably seeing interest rates rise due to, the prospect for more lasting inflation. And you're seeing the energy sector and the financial sector be the top performing sectors this year. And they trade highly correlated to the 10-year Treasury yield. So I think inflation is feeding through in that way, and you are seeing large moves in those two sectors. So to say that investors aren't reacting to it at all, I think is probably a mistake. I think they are. I think you're seeing that in energy and financials. But are they extremely worried? Doesn't seem like that.
So what then do you go after? How do you allocate assets at this point, given the fact that we've seen a massive run up in say energy stocks, energy prices? Where else do you go for that trade now, if that's what your view is going to be, that inflation will be somewhat persistent in the coming months and quarters?
Well, I think energy and financials still make sense for a period of time. And I think if you look at value companies, right, the earnings of value companies in this earnings season, just a few weeks ago, we were expecting about 28% rise in adjusted EPS, and they're coming in at about 37% adjusted EPS, so beating by about 10%. So they're still doing pretty well. To me, the story is what happens in 2022. And if you look at the earnings forecasts for 2022, value company earnings face tough comparisons. And the expectation is actually for a decline for the full year of minus 0.1%, whereas growth adjusted EPS are expected to rise by about 10%. So I think the narrative will change as we enter next year, as we get into these kind of mid-cycle conditions. I don't hear a lot of investors talking about it, but Atlanta Fed GDP is tracking at just 0.5%. Wall Street consensus forecasts for economic growth for third quarter is down to 2.5% to 3%. So we'll see how that changes the story. I think people may be surprised next Thursday when we get the GDP print.